Welcome to another day in the life. So I just woke up. You know what's fun? It makes no sense to do a video as soon as I wake up. But I don't know why. Like, day in the life. For me, like, you have to record a little bit after you wake up. So a beautiful sunrise here in Dubai. We have birch. It's currently 6:21 in the morning. I went to sleep quite early yesterday, like 10 p.m., 11 p.m. I think I fell asleep at 11 p.m. So, slept nicely. Let's go into the charts. You have to watch the full thing because I have a lot of value planned. Okay? Okay, so it's currently 7:16 a.m. The market is looking interesting for today. I'll do a breakdown very soon when we're closer to London session. I've been spending my mornings mostly like working on admin stuff, responding to DMs, responding to people inside of the Discord, reading, recording, doing anything besides looking at the charts, because that will just like make me want to do stuff like in the charts. And it doesn't really make sense, because what I normally say is that you want to avoid as much being at the charts when you should not be at the charts, when you should not be trading. What does this mean? Well, if you should not be trading before London session, then there's nothing really at the charts before London session, or like 30 minutes before, where you are going to do your forecast, right? So for me, it's been very important to actually get my head off of the charts in the morning so I don't do any stupid things. So I'm going to read a little bit right now, then I'll break the charts for all of you guys, tell you a couple of key lessons, and then we'll go on about our day. But if you're going to be 24 hours with me, then this is what we have to do now. So it's currently 9 a.m., 9:20. Came to the pool, going to read a little bit, chill, and then at 10 I will do the breakdown. So chill out, the breakdown is coming. Okay, it's time to record the market breakdown. Now I've chilled a little bit. It's 10:40 a.m., which means I've been awake for over 4 hours, read a lot, did a lot of stuff. So right now let's look into the charts. Okay, let's do a quick market breakdown for today. So I am looking for reasons to possibly short, but I'm mostly looking for reasons to not take a loss today. I think that today is more so going to be risk off, in terms of, okay, if we have an opportunity, it has to be really good for us to enter, versus risk on, which is, okay, market is looking very, very good. Let's short, let's take this to the downside, right? Because we have now range bound price action, we have bearish euro dollar, and we have bullish pound dollar, right? So pound dollar is starting to move bullish while euro dollar is still bearish, right? And with that being said, what I am looking for is for the market to move a little bit higher and then show me a 1 hour bearish closure. Now, for the euro today, we have German CPI, which is in 2 hours. And so I do expect some volatility, but I don't intensely expect to execute on it, basically. But as the market starts moving higher, if we then see a 1 hour market structure shift, then sure, maybe I'll enter towards these equal lows down there. But because we are starting to see one pair bullish, one pair bearish, then we have NFP week, then we have presidential elections, I am going to be very, very careful. So keep that in mind. That is the mindset for today. It's how can we avoid losing while still having a probability of winning. So hope you guys enjoyed, and I will see you in the rest of the day in the life. Okay, I'm not seeing anything in the market as of now. We are not even in London session yet. But one of the things that I am going to do is that I'm going to exchange now dirhams for euros, because I will eventually need euros more. And so, because these are basically the same chart, I'm going to exchange some dirhams now, because I do think that eventually there is going to be a pop to the upside. I do believe that that might happen. It might not, right? We might go to all of this liquidity down here, in that case, like, this is not going to be the best conversion. But overall, if the market does impulse to the upside afterwards, it would be a profitable exchange. So I'm not really entering in the market, but technically I am, because I'm going to participate in a foreign exchange. Fuck. You failed me. We always do the same thing in the day in the life. It's like home. Eventually we go to the Dubai Mall. We do something. We always record here. So. I think I know who that car is from who that car is. So I went long euro dollar. Just kidding, right? We just exchanged money. But I did not trade today yet. Do you guys know what I don't like about these day in the lives? Is that I constantly have to wear a t-shirt when so much of my time I spend not having a t-shirt on because it's too hot. But let me show you something. So this is euro dollar right now, and we were talking about it right here. Then it moved to the upside. And I want to explain to you, and I told you that there's going to be a lot of value here. I want to explain to you what I mean with today is like a de-risking day. And that's why I wanted to make the video today, is because I want to show you all of the stages of my trading. You've seen me being aggressive, you've seen me being conservative, you've seen me taking wins, you've seen me taking losses. But let me explain what I mean by this. Okay, so this is the thing. You need to understand that there are two types of markets. There are the high probability markets and the low probability markets. Now, the way that you identify these two is through how the markets are dancing with each other. So for example, right now, I showed you that pound dollar is bullish while euro dollar is bearish. Right? That means that these markets that should kind of be moving the same, they're not moving the same. That means that we're talking about low probability conditions. So what do you do in low probability conditions if you want to keep a good strike rate? Well, you start de-risking. And what does that mean? That means that you reduce trade frequency and you increase the probability of the trades that you take. Because like that, you are able to avoid losses. And that's what I mean with de-risking, is decreasing the trade frequency and increasing the probability of the trades that you take. That's why I said that I'm waiting for a 1 hour market structure shift. I'm waiting for pound dollars to look bearish again. And then when you have high probability conditions, this is where everything is bearish, for example. This is where you increase trade frequency, you reduce probability, but because the market is in high probability conditions, you can still make profits, right? Because you can be a little bit more aggressive because the market is high probability. But when the market is low probability, you reduce the trade frequency and increase the trade probability. And I have one deep-rooted belief that a lot of people hate me for. They are like, oh, you're so bad, it makes no sense, blah, blah, blah. And I'll talk about that today, so make sure to stick around. Okay, so I just wrote in the Discord that I expect pound dollar to move a little bit bearish just towards this bullish order block. And today we can see that pound dollar is actually more bearish than euro dollar. So again, it's not the cleanest price action, so I'm going to be a little bit careful. But if there is a possible short, that I might take it, because we might go to this level and then eventually to here, and then from, let's say we do a power of 3, we have 25 pips. It's not a lot, that's really the issue, but the reality is that if the market then does indeed move to the downside, then there you go, you've taken a good trade. But we'll see. Again, more careful. Okay, so going back to what I said, yes, I still think the market is going to move lower, but I don't think there is enough of a risk to reward here. Let's say we would have entered right here. The stop loss would have to be like 28 pips. Towards this order block you have 0.5, towards the lows you have a 1-to-1, but personally it's, as I said before, that I'm going to focus a little bit more on higher probability now. That's what I mean with risk off, especially now coming into elections. I do recommend you doing that, and you are watching this a couple of days before election. Just keep in mind, high volatility events / low probability price action means risk off, and that is what I personally deem as good qualities for traders, being able to identify those. And one of the ways that you can see that it's still low probability is the fact that euro dollar is still ranging around, but overall bullish. Gentlemen and gentlewomen, we have some developments in the market. So euro dollar turning just a little bit bearish, which means we just closed below. What do you think that means for pound dollar? Well, pound dollar has dropped way more. As you can see, it was way more bearish. So very interesting to see the development. Let's say that we would have entered in that trade. It would currently be running, if I'm not mistaken, 1 hour? Yeah, around 1 hour. But again, I'm still okay with not having taken this trade. Okay, so I have just recorded actually a video for YouTube, so you'll see that. You've probably already seen it. And it's a video about why I didn't take the pound dollar trade. Maybe I'm coping. Maybe I am. But look at this. Like I was talking about this trade and how it started to break to the downside. And in the video, oh my god. And in the video, I was basically explaining why I did not take this trade. And it's basically what I told you right before, with just an added twist that I will break down after. So you can see that already there. But now I have to do the midweek market breakdown for the community. So I'm going to do that. Then I'm going to jump on a business call, and then eventually I will break that down. Okay, so let's record the midweek market breakdown and calm down. I did not enter in this trade.
It's a fake name, to be fair. Trading compass.
Yeah. Okay, I just finished the meeting. I'm such a businessman. Just finished the meeting now. We have a live stream for the Simple Trading Edge. And by the way, let me show you. The market looks really good for a short, because now euro dollar is also moving bearish. Pound dollar continues breaking to the downside. This creates higher probability conditions. So I do expect the short, but we have news coming in 15 minutes, so I can't really be doing anything. Is that a lot of traders try to enter in the markets to prove to themselves that they are doing something. Okay, so I have just finished the live stream, and we actually might still have a trade today. So on the live stream, I said that if we start breaking bullish right here, I might actually enter in a trade with lower risk. Okay, lower risk. I'm going to enter with like 0.5 R risk, so keep that in mind. We haven't had any follow through, so I'm just going to be careful. As I said here, there is no need to trade lower probability conditions. Okay, so before I go onto the profitable trade that I took on NASDAQ, which stick around, I want to talk to you about the controversial opinion that I have that many people disagree, but guess what? This is right. You can't control everything about your trading, and I call this the trading trifecta, which means that you have 3 things you need to look at: risk to reward, strike rate, and trade frequency. So you can pick between 2 of these, but you cannot pick all of them. What do I mean by this? If you want your next trade to be a winner, which means your next trade is 100% strike rate, and as we know, it's never going to be actually 100% strike rate. You can be the worst trader in the world that just calls the top. But you can have a 100% strike rate. How? By completely reducing your risk to reward, right? What YouTuber do you guys know that claims to have huge winning streaks? Oh my god, I'm so good, I have a 90% strike rate. And it's like, yeah, because your risk to reward is 0.01. and you're still unprofitable, right? So you can obviously have a very high strike rate if you have a very low risk to reward. Like, how many times has a trade barely gone into profit for you? Well, if you close it, you have a 100% strike rate, but you do not have any risk to reward, right? But let's say you want a high strike rate and you want an acceptable risk to reward, let's even say 1-to-1. What are you going to do? Well, this is impossible. And then 2, you would have to reduce your trade frequency a lot. Why? Because you would have to wait for the perfect market conditions. So this to say that in trading, you need to understand high probability and low probability conditions, as we talked about before. And then second of all, you need to understand that you are in control of your trading. But anyone that sells you a high strike rate, high risk to reward, high trade frequency, they are just selling you a dream. That is literally impossible because the market balances itself out. Now, second of all is, okay, if you want today, what was my focus? Increase my strike rate. I don't want to lose today. That means that I'm going to reduce my trade frequency by a lot and I'm going to reduce the risk reward. That's how I made sure that today was a profitable day on FX. What happened? Well, this didn't happen. And so there was no trade, which means that my strike rate technically was 100%. Oh my God, I am amazing. But as you can see, again, if you understand high probability and low probability conditions, you are able to understand how you can balance this and become profitable. Okay, so I'm currently running a nice trade on NQ, seeing if we target at least these equal highs. And once we do, I will be managing aggressively up here. So I will basically be pushing the stop loss very, very quickly once we reach this high. So this is looking good. We might have a little bit of a pullback now that the new 1 hour has opened, but I do believe that we might continue breaking higher, that this was all like a bearish push before a continuation higher. Okay, so I'm going to quickly show you me exiting this position. So this was the idea, this was the final target. So the goal is to get to that final target as quick as possible without squeezing it too much. I would like to see a big push from here. And sometimes, by the way, this is less profitable than just taking profits, obviously. But because I do believe that the market is bullish and I do believe that the market will reach the fair value gap up there, so we can put this as next target. You can see that it's okay to give a little bit of room for the market to breathe because you can get an extra 16 handles, which in this trade is an extra $3,200. Let's see. So that is a stop loss moved again. Let's do this. Okay, now stop here. Okay, nice. Now we are currently running 2.3, which is a 4R. So we have locked in a 4.2R, which is great, which is 0.5 hour more than if we would have taken profit. But again, it's always the risk that you get tagged out. So we just got tagged out right here, 4R. Very nice. I can show you the executions. So we had the short right here, which I quickly took a loss because again, I didn't really want to hold this too much. Eventually I saw, okay, because we flipped the fair value gap, and then once we flipped the fair value gap, I executed on the long, and then that is what took us to TP, and that is on the day an $1,800 day. So that is great. That's basically me for today in terms of trading. Okay, so beautiful. We have this trade that, again, I was thinking about longing this if it would have closed above, and guess what? We did not. On pound dollar, it completely reversed. So once again, it proves the point that low probability trading conditions is not the best trading conditions. I'm extremely happy with the way that I traded today. So I'm going to break everything down on what happened today. Then we'll go back to a very important message right at the end, and then I'll let you go about your day. Okay, so let's do a quick breakdown. We had the very big push lower towards the order block on the 4 hour, and on the 1 hour, this was an extreme fair value gap, right? So from this extreme fair value gap, I'm expecting the market to move to the upside. But since I understand, okay, the market is actually quite bearish, which means we can continue breaking lower, I was like, okay, let me just enter in a short. If I prove myself wrong, I'll close very, very quick. So my stop loss was 35 handles, and I closed it down for 87.25. So that was a 0.3 R loss. And then as the market flipped bullish, I was like, okay, This 1 hour fair value gap is holding. Let's take a long. I took the long right here. Then the market goes a little bit into drawdown and then eventually just impulses to the upside, goes towards the TP, and as it taps the TP, I manage aggressively as you saw before, and there you go. The market then reaches the 1 hour fair value gap from that I mentioned in that video, and now I'm just expecting range bound price action. If the market is range bound, then so let it be. If it doesn't and the market does move nicely, then perfect. Very happy with the day, $1,800 day. I was able to basically not trade anything on EU today, so keeping my 100% strike rate on FX in these past few weeks. And on pound dollar, again, you guys saw the market swept these lows once again, just like this previous trade, just swept these lows right here and then impulse to the upside. Pound dollar is doing the same. So this is not the highest probability trading conditions to trade. That's why I've been avoiding entering in lower probability trades. Again, don't forget this. And that's it. Let's go to the outro. So, as you know, the outro always has to be outside. Why? Because like that, I can show you the birch, and it's always a nice video. So, this is what is important about these videos. I showed you today that being a profitable trader is not about always being right. It's about knowing when to be aggressive, when not to be aggressive. It's about these small, tiny skills that you learn as a trader and you become better. Like these small 1% improvements are going to change your trading forever. So we're talking about knowing when to trade, knowing when not to trade, knowing what is high probability versus low probability, knowing when to wait, when not to wait, knowing when to be aggressive, when not to be aggressive, knowing when to manage aggressively, knowing when to take profits, right? All of these things are extremely important in trading. Like these past few weeks, again, 100% strike rate on FX, on futures, profitable on futures, right? With a like 50% strike rate. But as you can see, it's all these tiny things that I talk about in the videos that make a profitable trader. That's these tiny things that made people inside of the Simple Trading Edge profitable, right? It's not like something that clicks. It's small 1% improvements, and that's what you need to aim for every single week, every single month. Aim for small improvements and you'll see that you can become a profitable trader. So I hope you guys enjoyed, and I'll see you in the next day in the life. Let me know in the comment section with this emoji that you are still here and your favorite moment of this day. Hope you guys enjoyed. See ya.